Welcome back to Be Great Economics. This is Nate. Today is your weekly update, Tuesday, January 11th, 2022. So today we had some interesting news out of the Federal Reserve Chair, Jerome Powell's confirmation hearing in front of Congress. And the comedy of it all is kind of that last week the market was losing its mind. Ever since Federal Chair Jerome Powell has been in place uh, in November, the expectation is that he would become hawkish, and sure enough, it continued that he said he was going to raise interest rates. He said he was going to taper the balance sheet, and then in last week's news, the meeting minutes of the Federal Reserve board meeting showed that they were talking about a fourth rate hike and they were unwinding the balance sheet. We're actually talking about selling assets. The market lost its mind. And then today, all of a sudden, he's extremely dovish in front of Congress. If this doesn't tell you there's a lot of politics at play and opportunism at play, I really don't know what is a sign to you that there is clear and obvious manipulation going on in all markets at all times. But that said, we're going to go over a few things here today on what occurred and over the past week, what have been some of the changes. So first off, I'm bringing up, this is the 10-year tips. Someone told me on Twitter today and pointed out that the tips has been suppressed largely due to the bond buying by the Federal Reserve. And that has started to kind of be released by the fears of inflation actually kind of pushing it up. The pressure has finally given way and the tips are starting to move up faster than the bond rate where they had been previously inverted performance. So this is kind of interesting because if gold is generally trying to keep up, this was the peak in gold before, and then we saw a little bit of a rally here and there, but ultimately gold was falling, and then we've seen sideways performance. If we start seeing tips be released or reverse, then we're probably going to start seeing gold continue to move from here. So it was just an interesting point that the market signal was missing, but this move is rather overextended, as we're going to see is happening in a lot of markets. But here's the Federal Reserve balance sheet. Just a reminder on the update, there has been no taper. This rate of change has not dwindled yet. If I start seeing this, I'll change my tune, but that none of that is happening. I'd even change my tune if I saw this. Just a little bit less, but that's not happening. We are on a straight trend. So right now, the Federal Reserve is buying everything. So let's get into our high risk assets. We'll get into the NASDAQ. So I had seen this distribution trend going on, and actually let's look at the actual NASDAQ NDX. I had seen this distribution trend establishing, and as I said last week, and I think the week prior I brought this up, is that we need volume here. And what did we see? We just saw it on the QQQ. Sorry, it's not on the NDX, but the volume increased into these buying pressures. Now, the thing is, the confirmation of this distribution would be that we would see a diminishing volume on the way up and then increasing volume on the way back down. If we see the volume collapse and we still see price fall here, because we have another event tomorrow, we have the release of the CPI. We have the Bureau of Labor Statistics brief. If we get information on CPI tomorrow that is going to send markets into a tumble anyways out of fear that the Federal Reserve will still continue to worry more about inflation than they will about job creation, then we will continue to see markets tumble. However, we have hit a point of being highly oversold here, and so we had to get this spring no matter how you looked at it. But you add in Federal Chair Jerome Powell's statements today of basically being we're going to remain in a long-term trend of low interest rates and stating that we're going to need to continue to see expansion of the balance sheet. We know that they can't really bring the rates up very much, and talking about 0.75 or 1% interest rates is extremely low. Obvious to anybody who's been paying attention that tapering is not exactly on the menu right now. So that doesn't mean that we can't do it. It doesn't mean that they won't do it. And I'll pull up the Federal Reserve effective funds rate history, right? This was the taper tantrum. This was the 2008 market or housing market crisis. And this was the 2002 crash, and this was the 1989 black Friday. Raising these rates, or sorry, Black Monday, raising these rates eventually leads to a crash. But when they start raising the rates, you get chaos. Start raising the rate, you get chaos. Start raising the rate, you get chaos. Just talking about the rates, you get chaos. So the thing I want to highlight here is that typically we go into much bigger blow off top in the security or the risk asset once we start raising rates. So even if they're not going to raise them, the more they talk about them, as far as the market's concerned, talking about it might as well be raising rates because the whole market is tuned into this paranoia. Now, watching the same signal as everyone else might not be the best one, but it is functioning right now. Don't fight the Fed kind of logic. Let's go to the S&P. Same thing. I think that this is still a form of distribution. We are seeing that it is getting rejected with very high volume here. But look at it diminish here. We want to see the volume rise into the price rise. That's going to be your confirmation here. We did get oversold in this range. We still kind of didn't even break the long-term trend. I don't even think in the NASDAQ, we really didn't break the long-term trend of the NASDAQ. We wicked below it. It's barely even worth noting here. But overall, so if you're a dip buyer and you're a believer in this blow off top, and I'm going to show you why I currently actually am a believer in it, even if I don't find it to be a very safe bet long term, in the short term trade view of it. Oh, sorry, let me do the NASDAQ divided by the SPX. Price in the S&P 500. I've shown this before. I think we're in a long-term uptrend. This is a consolidation phase, and the speculative asset, the NASDAQ, is more likely to get some type of blow off top. Now, do I think that it gets insane? Do I think that it gets to 1999 levels? You know, party like it's 1999. I don't know. We're already above it, but do I think that the scale from here means that we're going to go to, what would that put us at? Like a 4.5, a 5, 5.5 in terms of ratio, almost doubling the NASDAQ versus the S&P. I don't know how plausible that is. Maybe we just stay in this range. There's no guarantees, but if you get the rate hike fear that was happening here, you're getting the rate fear here, what I see that as is your opportunity for the blow off top to continue from this point. Now that said, people are all betting on this blow off top, and as we've seen in Bitcoin, betting on a blow off top usually doesn't work out in everybody's favor if everybody's betting on the blow off top. But anyways, let's go through some of our other risk assets, our monetary assets. Bitcoin has been in this downtrend. We can put it on log and see the trend lines are different. Here's what I presented as this was a risk area, right? You should have no, like I don't see myself holding leverage here. It's below every one of these trend lines. The only thing it hasn't broken really, other than a wick, is this 40K point that I set a while back. And a lot of people have been sharing this one of the kind of half trend where we have ups and a down side to it. Ultimately, if you're staying above the second half, I would say that there's still a potential uptrend. We do have higher lows and higher highs between these 5 points. But this is still getting into that dicey realm of like, if you're going to buy a dip, it's not that this is a bad dip. And since we just got some confirmation that Federal Chair Jerome Powell is going to be dovish, maybe that's a reason to think that this is still going to continue. And if we continue in this low rate environment and you start to head into inflation and you don't get a massive deflationary pressure coming in, we don't get some type of serious market crash because the Federal Reserve won't allow it, then maybe that allows for more adoption of Bitcoin. You know, the longer this party goes on, the more people will get adopted into this network. And that to me is the long-term thesis of people start treating this as money, unless it's a speculative asset, as they realize they're more and more worried about inflation than they are about a crash. Altcoins, obviously, I use ETH as kind of a reference, have begun to taper off a lot. They are kind of repeating the same sort of problem that Bitcoin is having. And if you compare this to ARK-K, this is much worse off than Bitcoin is by comparison, because you realize, oh, this is just because that they had a EIP 1559 here in ETH and a lot of other coins. So we may see some weakness in the short term, but if Bitcoin finds a bottom, I'm willing to bet most of these end up finding a bottom. So if you are an altcoin speculator, this may work out for you. Let's go to gold. So not too much has happened, but we did see this bullish run up here. Now, when the federal chair when the Fed starts talking about rate hikes and changes in monetary policy, which is back here in September, we typically find a bottom into the transition into an uptrend in gold historically. And so if that's the case, then we could see a return here. And just to go over that, we'll go back to the monthly and go look at that from here. What do we have? We have rate policy change, rate policy change, rate policy transition. We had a rate transition here, and then 2013 here, and then a transition here. And so you see how it kind of creates a little bit of a shift change. Here's the 18, and then here's the 2020, and then the new policy logic. So becoming dovish or hawkish has caused shifts in the response to gold. So there is a plausibility that we generally turn this into a bull flag and continue on an upward trend. You know how I generally think about it. If you watched anything on my channel or my Twitter, I think that ultimately monetary assets are going to perform very well. Let's look at silver. Oh boy, chaos. 1 second. When we go over silver, note, I highlighted this little part here. I put in a couple of estimates on time for this distribution event, or sorry, this accumulation event in silver. And so each one of these things has progressively turned more green. This is the seasonality peak trade. Should be up here at 23.45. So do we reach this by the end of January, sometime before the end of January? We almost made it with this wick right here. So close. So you could count that if you go from the beginning of December to the end of January, that is the time frame to achieve that percentage change. So maybe that's it. Maybe we get another rise here. I still am concerned about, do we get a sell-off or do we just see a sideways trend before accumulation growth? We are seeing real changes in what is listed on the COMEX, how much is being bought and sold. The US Mint purchased 52 million ounces just in January alone. And if that doesn't sound like a lot, 800 million is the annual production of silver, which currently is sitting at around 710 in the past 2 years average, mainly because 2020 was a low production year. But if we also account for that 248, I think is what it was, 248 million ounces out of that were bought by the U.S. Mint was the highest purchasing year ever. The U.S. Mint not even like hitting 2011 levels of purchasing silver had already exceeded the amount that was purchased and sold. So we are getting a very serious sign here that there is a lot of demand for bullion, which is the other half to silver. And then you start looking forward into all of this opportunity into EVs and electrification and batteries, solar. You're going to start realizing, oh, this silver consumption is going to keep going. So I think long term, you're going to see an upside, and anyone being short down here in this range is kind of kidding themselves beyond that $20 line without some type of major deflationary crash. So I hope that this covered a reasonable amount for the week's updates. The thing to watch out for again is the inflation concerns. We want to watch out for major risk into the markets coming up because we could get a really high print. I think a low print would be anything below 7.2. So 7.1 and below would probably be reasonable to assume here in the market. I think that we're going to generally see that even though 7 would sound insane, when you look at the change of rate, you're going to see that it's actually going to look more like this, where we're getting an acceleration and then it looks like we're tapering off the rate. So even if we went from 5.4 to 6.2 to 6.8, it looks like we were accelerating, and then 7.1 would be a deceleration. So the market would read this as less bearish than they would be majorly concerned with. Energy and everything continues to raise in price. We get a few shakeouts here and there. I think overall we are looking at some inflection into risk off assets, and we're going to see some uptrend into risk on, while also monetary assets are going to start performing because people are going to start getting prepared for this chaos that they may fear. So thanks for watching. I will keep you updated on my Twitter, and see you next time.